Ken. If I can just remind you to have mobile phones off, and we'll be live streaming very soon, and I'll go and introduce you. Please all rise.
Good morning. Please sit down.
Application 1 of 2017 on the Commission's own motion, State Wage Case 2017, General Organization for the State.
Yes, good morning. Could we have appearances, please?
Thank you, Chief Commissioner. May it please the Commission in Court Session, my name is Brendan Endrican and with me is Claire Purcell. We appear on behalf of the Minister for Commerce and Industrial Relations.
Thank you, Mr Endrican.
May it please the Commission, Paul Moss on behalf of the Chamber of Commerce and Industry, and with me is Ms Kay Dudgeon.
Thank you, Mr Moss.
May it please the Commission in Court Session, Tim Diamond appearing for Unions WA.
Thank you, Dr Diamond. I understand that later today Mr Toomey from the WA Council of Social Service will also appear to make a submission. I can indicate to you also that we have received and had an opportunity to read the submissions that you have filed and the submissions in reply. They are from the Minister, from the Chamber of Commerce and Industry and Unions WA, and submissions from the WA Council of Social Service, the Printing Industries Association of Australia and a private individual, Connie Tawney. And we thank you for those submissions, and you can assume that we've had an opportunity to read them. I'm informed that the Fair Work Commission's minimum wage review has its final consultations today and tomorrow, and so we will reconvene a couple of days after the Fair Work Commission issues its minimum wage review decision. As you would be aware, we're required to take account of any other tribunal decisions that might be of relevance. Now, over to you, Mr Endrican.
Thank you, Chief Commissioner. If it pleases the Commission in Court Session, we'll begin with a presentation by our witness from the Department of Treasury on the economic outlook for Western Australia. This will be followed by an opportunity for questions. I will then briefly summarise the Minister's position as outlined in the submission and submission in reply that has been made. If it pleases the Commission in Court Session, we will now call Mr Christmas to the witness box.
Thank you.
Would you please state your full name and address?
My name is David Brian Christmas, and I work at level 21 David Malcolm Justice Centre.
And do you sincerely declare and affirm that the evidence you shall give to this Commission shall be the truth, the whole truth, and nothing but the truth?
I do.
Good morning, Mr Christmas.
Good morning, Chief Commissioner. Good morning, Commissioners.
Mr Endrican.
Mr Christmas, can I confirm that you have made a witness statement for today's proceeding?
I can.
Very good. And is the original one the one that you have with you in the witness box?
I do, it is.
And Mr Christmas, your witness statement states that you and your colleagues at the Department of Treasury have prepared the economic outlook document submitted as attachment A to the Minister's primary submission. Is that correct?
That's correct.
If it's convenient at this point, Chief Commissioner, I seek to tender the witness statement of Mr Christmas and the PowerPoint presentation that Mr Christmas will be speaking to today.
Yes, we'll receive the witness statement of David Christmas and the PowerPoint presentation once it's been presented, and they will be Exhibit Minister 1.
Thank you. Thank you, Mr. Christmas. Could you please take us through your presentation?
Thank you. Thanks, Commissioners. My presentation today is largely based on an assessment of the economy that was made in relation to the pre-election financial projection statement. So the forecasts are largely based on, are based on those. That was released on 9th of February 2017, just before the election, a month before the election. I may make comparisons with our expectations at the time I presented to the Commission last year, which was based on the state budget 2016-17. It was released on 12 May 2016.
And this year's budget's not been released in that normal time?
No, it's delayed due to the election.
Yes, thank you.
Yep. As you'd be aware, West Australia's economy has expanded by a very robust 5% per annum over the past decade, supported by very high rates of investment. Economic growth moderated to 1.9% in 2015-16 and is expected to moderate to 0.5%, or forecast to moderate to 0.5% in 2016-17. The moderation in growth has been particularly evident in the state's domestic economy, where activity has been dampened by large declines in business investment and very weak growth in household consumption. This has flowed through to the labour market, where employment levels have fallen, the unemployment rate has risen, and wage growth is weak. Overall growth is expected to lift in 2017-18, and encouragingly there has been recent growth in employment, including full-time employment, and increases in aggregate hours worked. The state's economy is expected to continue to grow over the next few years, supported by an expansion in exports, as recently completed resource projects increase the production. So what I'd like to do. Can I just use this? Okay, start off with the global and national context, and then I'll go to finish off with the WA economy. So this first slide is really a slide on WA's key export markets. According to the IMF...
Can I just interrupt you, Mr. Christmas?
Sorry.
Do you have copies of the PowerPoint slides available for us? I think that would be very helpful for us, perhaps, to make notes on as we go.
Sorry about that.
Yes.
According to the International Monetary Fund, growth in the global economy is projected to strengthen slightly over the next 2 years, from 3.1% in 2016 to 3.5% in 2017 and 3.6% in 2018. Growth in WA's major trading partners was 4.5% in 2016. Growth is projected to increase slightly, although it's only marginally, to 4.6% in 2017. That is up 0.2 percentage points, and then moderate from last year, and then it's projected to fall to 4.3% in 2018 and 2019. One of the reasons for the moderation in the rate of growth in the state's key export markets over the coming years is simply that China is our biggest trading partner. Growth there is expected to slow slightly as the government tries to transition the economy from one that's been very dependent on stimulus and capital towards consumption. Our second largest export market, Japan, is actually continues to grow softly, with growth rates that are under or around 1% per annum. Probably the most notable bit of news on the international front, though, is the US economy. The IMF is expecting the US to pick up from 1.6% in 2016 to 2.3% in 2017 and 2.5% in 2018. And importantly, the US Federal Reserve has shown its faith in the US growth strengthening since it's raised the federal funds rate over the past year. Commodity prices have actually, the March quarter this year were considerably higher than the March quarter last year. In fact, in the order of our index was around 40% higher, 40 to 45% higher. Now that was largely because of a big increase in iron ore prices, but it was also assisted by an increase in oil prices. Now, since the March quarter, there has been a drop-off in the iron ore price. So iron ore prices receded from a recent peak of 94.5 to closer to $60 per tonne at the moment.
I think about $66 is the long-term projected rate, isn't it? Something in that order?
Yeah, between 60 and 65. It sort of does vary a bit, but yes, it's in that sort of order. Next slide. So we do expect that the iron ore price will dip a little bit in the next year before sort of going back towards that longer term price. Just because there's a lot of supply coming on, and that includes from Roy Hill, which is WA mine, but also Vale, which is based in Brazil, and that's got a very significant mine that's coming on. This slide's really just the exchange rate, and it's showing that over the last year it's actually, while it's varied, it's been actually relatively stable at around 75 cents. Now, the decline since sort of 4 years ago, has improved our competitiveness relative to when we were at parity, and that has there has been an increase in things like international tourist numbers since over the past 3 years. So that's sort of indicative of some support from the exchange rate, although there are maybe other reasons of supporting that as well. In terms of the Australian economy, the Commonwealth Treasury's forecast was published in the 2017-18 budget, which just fairly earlier this month. So this is a bit of an update on the attachment A, which was based on mid-year review. Basically, the Commonwealth budget projects that after growing by 1.75 in 2016-17, the Australian economy should expand growth to 2.75% in 17-18, and then increase consistently by around 3%. The 3% is just slightly under its long-term growth rate for the last sort of 3 decades of around, I think it's around 3.2% per annum. The Commonwealth expects growth to be underpinned by strong export growth, an improvement in household consumption funded or supported through a reduction in household saving rate, strengthening in non-mining business investment, and a reduced drag on growth from declining mining investment. So non-mining investment is expected to lift given solid business confidence, above long-run average capacity utilisation in the sector, and business borrowing costs being at or near record lows. So this chart here is really, it's the standard variable owner-occupier and standard variable investor home loan rates. Basically saying that they are sort of low historically, but you can see very recently there's been, even though the Reserve Bank only reduced, well, its last move was to reduce interest rates by 0.25 percentage points in August. Actually, banks are independently putting up their mortgage rates. And part of that is a reaction to APRA, the Australian Prudential Regulation Authority, has expressed concern about investor home loans and the pace of growth. So they expressed that investor credit should be no more than 10%. So in reaction to that, banks actually have lifted the investor home loan rate so that it's actually higher than the owner-occupied rate, and that change occurred in August 2015. Very recently, there's also been the Fed fund rate being increased has flowed through the costs of major banks, and they've been passing some of that on. It's very hard to see, but there's a very small increase for standard variable owner-occupier home loan rate, but the standard variable investor home loan rate went up substantially more, just reflecting the concerns about Western market. Now, those at this stage aren't big increases, but they are increases nevertheless. It's open now for some reason. Anyway, I was about to get to this next slide. This is the West Australian economy, so I'll just turn to that. Sorry, I'm a bit fast. Following a decade of strong growth that I mentioned, 5% per annum growth, the economy is experiencing a period of below trend growth as activity consolidates at a high level. Growth in GSP, which captures both the domestic economy and the external sector, moderated to 1.9% in 2015-16, the slowest rate of growth in 15 years, and the first time in 15 years that the WA economy has grown at a slower rate than national. GSP growth is expected to moderate further to a record low of 0.5% in 2016-17 before lifting to an average of around 3% per annum by the end of the forecast period. Growth in 2016-17 and 17-18 is forecast to be significantly dampened by contractions in the domestic economy as resource construction continues to fall. At the same time, export levels are expected to increase solidly as major projects increase their output. However, the extent of weakness in the domestic economy means that GSP growth is expected to remain below trend in each year out till 2019-20. So I'll just go through the components. The key driver of what's happening in the domestic economy is the trends in business investment. So following a peak of when investment reached $78.6 billion in 2012-13, business investment has fallen over the past 3 years to $52.1 billion in 2015-16. Investment is forecast to fall by a further 32.5% in 2016-17 and to around $35 billion. Indications to date suggest that we're broadly on track. Investment is expected to trough in 2017-18, and a fall of 17%. So investment is expected to trough at around $29.3 billion before growth resumes in the 2 out years, 18-19 and 19-20.
Mr. Christmas, is it fair to say that the business investment peak that we had in the middle of the last 10 years, with that having passed, that we're returning to what might be seen as normal?
Yes.
Other than that peak?
That's correct. So by 2017-18, that's really basically how we would basically reflect that level there in 2018-19 reflects the long-term share prior to this sort of boom period. So the share business investment share of economic growth up to about 2004-05.
I mean, Gorgon would have been a significant contributor to those.
Certainly it has been. There was a lot of also, I mean, iron ore productions tripled in the last decade, or basically tripled. So there's the two sectors, there are two big sectors, iron ore, there was a lot of investment, and that, Roy Hill was the tail end of that. During that period, you know, we saw the creation of FMG as well, which was part of that tripling. So that's now one of the world's top producers.
So your longer term average is probably about 25 to 30 billion, in that sort of range.
So
possibly a bit higher?
Yeah, a little bit higher, because we actually have it troughing at 29 billion. So it'll increase slightly from that sort of level. 29.3, but around 29 billion really. Yep. That's expected to be supported really. You know, the size of the base, the capital base is so much larger that just maintaining and sustaining it will require quite a bit of investment. So that's part of it. There's also projects that do emerge through time as well.
Thank you.
This next one is consumption. Consumption's actually the largest component of the economy, and it's been growing very weakly at 1.6% in calendar 2016. Now, consumers are still spending on necessities, rents, health and food, as well as items such as insurance and financial services. But they have been a little bit more cautious with their non-essentials spending, and you can see that in that chart. In discretionary spending has actually, in annual average terms, been falling. So the greatest spending restraint in these areas is consistent with the fall in employment and record low wage growth that we've been experiencing. And the outlook for soft labour and market conditions, including wages, is also influencing spending behaviour. The overall moderation spending also probably reflects the fact that population growth, well it does, population growth has come off substantially, and I'll get to that shortly. So consumption per capita in annual average terms grew by a modest 0.4% up to September quarter last year. Now that's dated simply because the population data is dated. While savings data at the state level is not as good as we would like, the available proxy that we get from national accounts suggests that the savings rate peaked in June 2012 after the GFC and has been tracking down a little bit since then. But there's scope for that to continue to support consumption in the coming years. And just going to consumption in the coming years, I suppose this year we're forecasting consumption growth to lift, but only marginally to 1.75%, and then in the next year in 17-18 to 2%, which, as you can see, are both well below historical averages. And by the end of the year, pick up a little bit as well. As reflecting that stabilisation in the business investment and stabilisation and then subsequent strength, which should support labour market as well. So by the end of the period, we're expecting consumption around 3%. This next chart is dwelling investment, which is not a particularly, it's in the order of about 5% of the economy. 4.9% in the last year we've got. Dwelling investment declined by 13.5% in calendar 2016 after increasing by 2% in 2015-16. This decline largely reflects a 20% contraction in new dwelling investment, with expenditure on alterations and additions almost flat. Fell, but only very marginally. So the strong decline reflects the combined impact of softer demand, population growth is part of that, and supply overhang, which resulted from a record number of dwelling completions in recent years. That's consistent it's also consistent with leading indicators that we've been seeing, although all those leading indicators, the rate of decline has troughed, or it looks like it's troughed, which would be consistent with a stabilisation in the number of our expectation that dwelling investment should stabilise in 2017-18. And beyond that, grow broadly in line with long-term average rates. Putting all that together, because those are the major elements of state final demand, the state's overall domestic economy, which is measured by state final demand, is expected to fall. It's been falling for the past 3 years, and it's expected to fall in 2016-17 as well, and in 2017-18, which would mean a record 5 consecutive years of decline. While it does mark an extended period of weakness, it does follow on from a long period where we have very strong rates of growth. As shown in the chart, the outlook for domestic economy has been revised down since last year's budget, and that's mainly because we revised down our investment forecasts. Growth in state final demand is expected to strengthen from 2018-19 as business investment returns to modest growth and housing consumption picks up. The real driver of growth at the moment, though, is merchandise exports, which are growing very well. We're expecting them to grow by a solid 8% this year and 6.5% next year in 17-18, underpinned by a significant increase in LNG exports, particularly Gorgon. The last train of LNG train started producing LNG, and Wheatstone, which is expected to come on in 2 stages, mid-2017 and perhaps a little 6 to 8 months after that, the second train. So those are very strong increases. Those will result in very significant increases in our LNG exports.
What are the merchandise exports that are other? What are the sorts of things?
That would be including other minerals. Gold is one that's been performing quite well lately. But agricultural exports, elaborately transformed manufacturers. So we do have some shipping building down in near Henderson.
There's not much manufacture though.
No, although shipping is one area where we do some. No, granted, that's not a particularly big element of it.
Thank you.
In aggregate. Population growth that has slowed down substantially from a peak of 3.5% in financial year terms in 2012-13 to 1.2% in 2015-16. The state's population increased by 1.1% in annual average terms to the September quarter 2016, which again is dated, but that's just the latest information in terms of published population levels. We're expecting the population growth to remain modest at 1.2% in 2016-17 and 17-18, largely supported by natural increase. Because subdued demand conditions have basically meant that migration has been very modest, and it's actually fallen substantially. Beyond the next 2 years, population growth is expected to lift as West Australia's share of net overseas migration increases and the net outflow to other states moderates. So by the end of the period, I think we've got 1.8% population growth. Just turning to the labour market.
Just before you do that, if I may, Mr. Christmas, did you say anything about household savings in the domestic economy? I thought you might have mentioned it.
I did.
Under the heading consumption by category.
Yes, just in the lead, just before I went into in the discussion of consumption. Yes.
Yeah, what can you tell us about household savings within the domestic economy, either savings or getting ahead on mortgages and things like that, in raw terms and in comparison to the national economy? Are you able to comment on that?
Look, I don't have much data in terms of people being ahead. I understand that there are some people who are ahead in their mortgages. The indicator we really look at is the national accounts measure, which is an aggregate measure. That measure is showing that the rate of savings is coming off from post-GFC peaks, but it's still higher than nationally.
And is that indicative of a lack of optimism? I think at one stage
you'd expect it to reflect people's view of
concern,
their outlook and their employment prospects. And
I think 1 year we did hear that household savings were at a peak because, and I think it might have been last year, on the basis of people's caution about their future prospects.
Yes, we have to. We have to infer that, really. It's not that we've done any surveys within Treasury anyway to show that. But yes, we do know there are people that are ahead, but there's also people on the margins as well.
How much higher than the national?
That I don't have any numbers in front of me, and to be honest, I really wouldn't. It may. I'd be talking without really having numbers in front of me, and I'm sort of reluctant to do that. Yeah.
Thank you.
Going to the labour market.
Just before you do, can I ask you a quick question? In terms of
household consumption, what proportion of the economy does that make up?
So in our last, in 2015-16, I think it was about 40%. So yes, it's a fairly major component. Employment, monthly labour force data is very volatile. This data is only up to March 17. Today there's some labour force numbers out just before this presentation, and those numbers aren't factored in. One way of looking through the monthly volatility is to look at growth in annual average terms. So in annual average terms, employment fell by 0.7% in March 2017. The fall in employment in annual average terms had moderated slightly from a trough of minus 0.8% in January 2017, which was the largest decline in employment since the 1990s. The decline of 0.7% over the year to March was entirely due to full-time employment, which fell by 3.5% in annual average terms to March.
I'm sorry, you said it was entirely due to...
Full-time employment.
Right, yes.
Yeah.
Thank you.
However, the rate of decline has slowed in annual average terms from a 4.2% fall in October 2016.
How's it arrived at, Mr. Christmas? How do they work out what the unemployment level is?
Surveys, household surveys. So the ABS conducts surveys of households, and that's how they do it.
The contraction in full-time employment appears quite marked in the last year. Would that be right from that graph? It is marked.
It's in fact larger than the post-GFC falls. Well, the fall associated with the timing of the GFC.
And it seems that a compensating factor, if it is a growth in part-time employment.
That's correct.
Over that same period of time.
That's correct. So part-time employment has increased, and increased by 5.7% in annual average terms. That chart, it's not a growth chart, it's a contribution chart, so those numbers won't correlate exactly.
With the actual percentages?
Yes.
It's an indicative trend.
Yes. Yeah. This is annual average growth. The next chart is just to say more recently there has been an improvement in the employment growth. So this is quarterly growth, which gives you annual average growth, because it's over the last 12 months and the previous 12 months. You can mask some of the very more recent trends, and that's why I've provided this slide, which gives you growth till the March quarter. Again, these are based on numbers up till the release this morning. So in the March quarter 2017, employment actually grew by 0.7%. In contrast to annual average levels, employment in the March quarter was entirely underpinned by full-time employment, which grew by 1.5%. That was partly offset by a decline in part-time employment of minus 1.1%. So there are a number of recent indicators that show some improvement in employment. So full-time employment has been increasing in trend terms for around 5 months, and monthly aggregate hours worked has increased in trend terms as well since, I think, for most of the last financial year. This chart shows you employment by industry, and it's the latest data. There will be May data, but unfortunately that won't be out until at least a week or a fortnight's time, I think it is. And that basically is the annual average change in numbers of people. A notable observation is that growth has been driven by a majority of industries are actually growing, but there's been large declines in construction and a number of other industries, but the construction decline is quite noticeable there, and that would be associated with the dropping off of investment.
Now, in terms of the population information that you've given us previously, Mr. Christmas, to what extent are construction jobs filled by persons from outside of Western Australia, in your knowledge, who, when the jobs go, just go back home?
In terms of proportions and numbers, I don't have those. That's not to say. Anecdotal evidence would suggest it's a reasonable number. And certainly 4, 5, 7 visa numbers did increase substantially during the boom period. So there's definitely a large, reasonable proportion of that workforce. Now, I'm not sure I have a breakdown of how many of those are construction, but it's reasonable to assume that a reasonable proportion of those would be in that space as well.
Thank you.
This chart here shows that a number of leading indicators have strengthened over recent months. Well, it shows one of them, indicating that a turning point may be have been reached. For example, the number of internet job advertisements in West Australia increased for 6 consecutive months to the March 2017. This is equivalent to an additional 1,226 advertised vacancies over the period. So, that said, as you can see, the number of vacancies, notwithstanding that improvement, is lower than it has been in that sort of boom period as well. But the increase over the last 6 months is consistent with improved business confidence since 2016, according to the NAB Business Survey. That said, business confidence is sort of assessments of the future. Their business conditions have been weaker, but even below the sort of negative, but improving over that period as well. So that's more the actuals. So people have been expecting improvements. Improvements are happening. They're just not as strong as perhaps they were expecting at the time.
Is that a national survey, or when you said it's a NAB survey, was that a national survey?
It's a national survey, but it does have a WA component.
So when you spoke, you were speaking about the WA component?
That's correct.
Thank you.
And our confidence levels aren't as strong as nationally. So I'll be up front, that's for sure. And the conditions, as I said, are still weak. The employment, just in terms of our forecast then, so the pre-election financial projection forecasts a decline of 1.5% in employment in 2016-17, consistent with the large forecast contraction in the domestic economy and a further fall in construction activity. Despite this, labour force data recently released since the PFPS suggests that the decline will not be as severe as forecast, and certainly today's numbers add to that assessment. So we don't expect to achieve that number will be realised. We do think that employment will be negative. As I've said, over the year to March it was -0.7. So we do expect it to be negative in 2016-17, but not nearly to the extent of that forecast. So, beyond 2016-17, we're expecting very modest growth next year. Again, there's probably the forecast we have is 2.025 percentage points. I think there'll be some upside, but I'm not in a position to quantify what that is because we haven't done a proper forecast round for a while. But I'd suggest that it'll be a bit stronger than 0.25. And beyond that, as investment picks up, we're expecting the labour market employment to pick up strongly as well. This chart here is the unemployment rate, and what it does show is we're moving from a position of being below national unemployment rate to being higher. So the state's unemployment rate over the year to March was 6.2%, up from 6.6% this time last year, and 5.2% in the year to March 2015.
What's the long-term average of Western Australia, as best you can?
If just looking at that chart, you'd have to say, so for that period there, as a way of looking at it, you'd probably say around 6.5%, 6.5%. But so I don't actually have that number in front of me. Sorry about that. I'm just really.
No, it's only the way that the graph presented to me too that had me ask the question. But that's coming up, 35, 40 years now, and just looking at it, it seems like we're about at the average. Getting close, trending towards it. Yeah. It's the equal highest rate of annual unemployment in over 14 years. So WA's unemployment rate is now higher than the national at 5.7 in the year to March, and is equal to the equal third highest of all states after New South Wales and Victoria, and it shares the unemployment rate of 6.2% with Queensland. In addition, the underemployment rate rose to a record 10.4% in the 3 months to February. Excuse me. Which is almost double the recent low of 5.5% in mid-2012. This measure indicates that there are a large number of workers that would prefer to work more hours. It also suggests that the degree of spare capacity in the labour market is higher than the unemployment rate indicates.
That's interesting that you should say that, because I think only in the last couple of days the Reserve Bank Board has commented that the increase in part-time work appears to be related to preference. But I'm not sure that that's based on any sort of empirical study, but rather might have been commentary from the board meeting.
Oh, okay, yes. Conditions also may vary between what people want here and over east as well, and they unfortunately, well, that's their job. They take a national perspective.
Yes.
We don't. There's probably
there's
probably a mix of
yes.
But the underemployment rate really does incorporate as part of its measure people who want to work more hours. So it's definitely based on including that figure.
Yes, this is an article from the Australian of the 17th of May, which says the Reserve Bank does not believe the growth in part-time work should be seen as a sign of weakness in the economy. Of course, the Australian economy, as you point out. It mainly reflects personal choices and the shift to a more service-based economy. So, but as I say, I'm not sure that report indicates other than commentary rather than any study of the issue.
I don't actually have the national unemployment rate in front of me. So.
Thank you.
Just in terms of where we think the unemployment rate is headed, we think it, consistent with, basically we think it's going to stay. Our projections are for it to be 6.5% in 2016-17. Over the year to March, it was 6.4%. Over the year, so over the sort of 9 months of the financial year to March, it was averaging 6.4%. But I understand today's number was a bit lower than that, so there may be some very modest downside risk to the 16-17 number, but it wouldn't be substantial given that we're already 6.4% over the first 9 months. And we're expecting unemployment rate to stay at 6.5% in 2017-18 before it gradually falls as the domestic economy strengthens in the out years. the one area that unemployment rate has also been increasing, and quite strongly over the past year, is youth unemployment. So unemployment among the state's youth rose to an annual average of 12.4% in March 2017, up from 10.8% this time last year.
Speaking for myself, it seems like from about 2008 to currently rates more than doubled, or close to it, or thereabouts.
Yeah,
Which I find disturbing, speaking for myself. But are there any particular factors, Mr. Christmas, that you think might be behind such a trajectory with particularly youth unemployment?
I think it clearly is just it's domestic demand driven. It's not included here, but earlier this morning I asked one of my colleagues to map this versus the unemployment rate, the overall unemployment rate, and if you map them on two different axes, they track remarkably well.
I was trying to do that very roughly when you were talking before, comparing the previous slide with the youth unemployment slide. And the trend is consistent, but how much it lines up, I'm not sure.
It tracks well, but there are periods where it will, one will be a catch up to the other or vice versa sort of thing.
Can you give us any sense of breakdown in terms of how that works in a regional or rural area as opposed to metro?
I don't actually have that data, and I haven't looked at it. Doesn't mean we can't supply it if that's requested. Yep. Notwithstanding the increase, we are still below the national average, and we are still the second lowest youth unemployment rate of any state. New South Wales has one youth unemployment rate of 12%, whereas ours is 12.4%. Certainly, unemployment in this age cohort did fall by 2% in annual average terms. So, employment growth has been very weak in that cohort compared to -0.7. Again, largely, primarily, I would say demand driven, but it's employers making choices. Participation rate. So the last element of the labour market I'd like to discuss is just the part rate. The state's participation rate fell to an average of 67.5% in March 2017, down from 68.4% at the same time last year. The current rate is the equal lowest rate of workforce participation in WA in more than a decade. Okay, that's probably just about right. The decline likely reflects an increase in discouraged workers, consistent with softer labour market conditions and more limited job opportunities, as well as weaker wages growth, which acts as a disincentive for new entrants and increases the likelihood that job seekers will be discouraged. We're expecting the participation rate to fall a little further. So our forecasts in the pre-election financial projection statement for a participation rate of 66.8% in 2016-17, falling to 66.2% in 17-18, and remaining at around 66% thereafter. So the next slide, sort of section is wages. There are a number of indicators published on wages. We view the wage price index as the best measure, and I think that's generally held view. It is because it is a measure of wages that changes, of wage change for a fixed quantity and quality of labour. So it abstracts from compositional changes in the labour market, such as hours worked or movements between industries. Therefore, this presentation will focus on that. Growth in West Australia's wage price index has continued to moderate over the past year, which is consistent with increased spare capacity in the labour market. The wage price index grew by 0.3% in the March quarter 2017, following 0.2% growth in the December quarter 2016, both well below the historical average quarterly growth rates of 0.9%. Annual average growth slowed to 1.5% in the year to the March quarter 2017, and that figure just came out yesterday. This is the lowest rate of growth since the series began in 1998-99. Private sector wages grew by an annual average of 1.3% in the year to March quarter 2017, also the lowest rate on record. Growth in real wages...
Sorry, did you say the private sector is the lowest growth rate on record in WA?
For WA, yes.
And in fact, it's almost half the growth rate in Australia, I think.
So national...
1.8.
The private sector number. I'll have to get that.
No. If you don't have it readily available.
Growth in real wages moderated slightly to 0.9% in the year to March 2017, following 1.2% growth in 2016. This reflects again a combination of the slowdown in normal wage growth and a small increase in inflation over the year to March 2017. While annual average wage growth was also subdued at a national level, so for the total WPI that was 2%, the chart shows that wage growth in WA remains below national growth as it has for 11 consecutive quarters. Prior to 2014, the state's WPI had not fallen below the national average since 2004. Wage growth in WA is expected to remain subdued in the short term, consistent with the modest domestic economic conditions, or weak conditions, in the state relative to the national. In terms of the outlook, wages are expected to increase, or forecast to increase by 1.5% per annum in 2016-17, reflecting that softness in the labour market and domestic economy. Wage growth is then expected to strengthen next year to 1.75% and to 2.5% in 2018-19 and 3% in 2019-20. And those later increases are consistent with our expectation that investment will start picking up.
Is it fair to say that a number of the significant indicators would suggest that in terms of the economy, the Western Australian economy overall, that this is the bottom of the trough?
In terms of GSP, total economy, we're saying yes. In terms and in individual sectors, there does seem to be that the fact that investment's falling one more year means that domestic economy is probably going to shrink next year in 17-18. But that's when we're saying that's where we think it.
So both in terms of just about all of the indicators, either this year or next year will be the trough.
Yes.
From then on, there's anticipated gradual growth.
Yes.
Yeah, thank you.
That's correct. Unpublished data does show to suggest that the wage price index in the year to March 2017 remains reasonably solid for sectors such as public administration, safety, and education and training, both growing at 2.5% over the year. Retail trade and accommodation and food was both grew at 2.1% over the year. And healthcare and social assistance by 2%. But there are other industries where it's very weak, so professional, scientific and technical services. Annual average wage growth was just 0.1%, so there's certainly a difference. Inflation, I'll turn now just to inflation. The inflation was, well, there wasn't any change in consumer prices in the March quarter. And as a consequence, over the year to the March quarter, Perth CPI increased by 0.6%. The fact that there wasn't any growth in the March quarter really reflects that prices for rents and project homes have been declining, and that's offsetting. There's a number of other declines, but they're probably the sort of big items. Furniture is another one, I suppose, and those declines offset increases for health-related goods and services and automated fuel. Nationally, CPI grew by 0.5% in the March quarter. Nationally, housing-related costs are going in the opposite direction, and they are contributing to CPI growth. In annual average terms, as I mentioned, CPI in Perth is growing by 0.6%. That's been supported by tobacco and alcohol, as well as items such as health and education have also increased. But housing has been a big damper on inflation, and it's detracted 0.38 percentage points from growth. Communication prices also going down, and that contributed to 0.2 percentage points detraction. The national CPI increased by 1.5% in the year to March quarter, and the tobacco, housing and health were the largest contributors. In year-ended terms, which is March quarter on March quarter, last year, Perth CPI increased by 1%. And while it was flat this year, it actually fell by 0.6% from memory in last year, in the March quarter, so that just reflects the timing issue. In terms of our forecast, the PFPS forecast for Perth CPI, we're forecasting, well, the PFPS forecasts have Perth CPI growing at 1% in 2016-17, increasing to 1.75 in 2017-18, 2.25% in 2018-19, and 2.5 in 1920. So the 16-17 number, as I mentioned, has been dampened by the falling residential rents and project home costs. The expectation for growth to gradually lift from 2017-18 reflects additional annual increases in the Commonwealth's tobacco excise, a gradual recovery in rent and project home prices as the housing markets turns around, and increases in administered prices, including health insurance, premiums, education costs, property rates and charges and utilities. Inflationary pressure from these sources is expected to be tempered, at least in somewhat by weak consumer spending, at least in the short term. I have to say that the March CPI data release, which was after the pre-election financial projections, does suggest there's some downside risk to that 1% forecast, but we would expect it to be close to 0.75. Again, we haven't revised the forecast. I'm just giving you an indication of direction. In terms of how our forecasts compare nationally, in 16-17, our forecasts for CPI are a lot lower than nationally, and that's simply because housing's at a different point in time, at a different point in terms of price growth or rent growth compared to the East Coast markets. But beyond 17, 18 and beyond, they're basically broadly consistent with Reserve Bank and Treasury lending. Just before I finish, I'll just talk about a few risks to outlook. The biggest domestic risk is always investment. The timing and magnitude of work can change the profile of growth substantially, just given we're talking about projects that are multi-billion-dollar projects. In some cases, our forecasts do include a provision for prospective major projects to emerge over the forecast period. If that doesn't occur, then investment may be weaker than we anticipate, which may impact on, which would, if it doesn't happen, would impact on our growth profile.
There was a suggestion in one of the submissions that there have been a number of applications for exploration licences that tends to be indicative of potential, at least, for
projects going forward. Yes, and I would say, anecdotally, I've been observing that you're hearing more about future projects than we were hearing this time last year. And that includes Woodside talking a little bit more openly and positively about the prospect of browse than it has in the past. Now that's still a little way off, but I think they were talking about an investment decision probably 2 years away. Something I think it was 2019 was mentioned. But, so it's not immediate, but it's one of those projects that could support it towards the. It's just an example, I suppose, of the anecdotal talk about projects.
At least they're talking about it now, rather than not before.
Yes, that's right. Yeah. The housing market is also one where there's been a lot of spare capacity because of the decline in population. If population growth is weaker than we anticipate, which is a risk, then the demand in housing may be weaker than we anticipate. And given we've had quite solid increases in completions recently, that does mean there may be a risk to the housing market. I suppose the other risk is whether interest rates increase either due to the cost of funds for the banks or because conditions in the East Coast are stronger, and because the RBA makes national decisions, it may make a decision that's not necessarily in time with our cycle, I suppose. The biggest, I suppose, globally, growth in China has been supported by rapid accumulation of debt, particularly since the GFC, and transitioning towards a more sustainable rate of debt accumulation will constrain growth over the medium term. Of the very short term, we think there has been some. The fact that they've got a 5-yearly National Congress of the Communist Party late this year, and party members may want a stable growth outlook before they. It's where they usually transition or tell you who the next leader's going to be, sort of thing. And this year, I think there's quite a few changes happening. There may be. The government may want to have some stability ahead of that, and so they may prop things up. That said, there has been some incremental tightening in the housing space, and it just depends how all that plays out. After that meeting, how they transition to a more sustainable growth path will determine whether the risks. That's just a risk. I suppose we've said United States government policy. I suppose with the new administration, it's perhaps adopting policies, or at least talked about policies that may not fit with previous norms. and so there's some risk to potentially tightening of trade or the imposition of trade barriers. If that was to occur with our major trading partners, that could impact on our exports. Then, that again, I think the US and China, I heard, did sign some sort of trade agreement the other day, so perhaps I think that's not as large a risk as maybe we anticipated at the time of the PFPS. So those are, those are the risks to the outlook. Just to finish, this last table brings all our forecasts together. A table showing economic conditions are expected to improve in 2017-18, with overall economic growth expected to lift from 0.5% to 2.5%.
Now, is this the table on table 1 in your economic overview? I think it is. Yes.
Table.
Page.
Yeah, essentially equivalent.
I think you indicated earlier that one of the first ones that you referred to had been updated since that document. This one is.
Oh, that was the Commonwealth budget
yes.
chart.
Oh, I see. Thank you. Yes.
So, in 2017-18, overall economic growth is expected to lift to 2.5, following the 0.5 this year. Employment is expected to turn from being negative to positive. As I noted, there's that 0.25% growth. There's some upside, but we haven't quantified what that is. Obviously, there's been some recent trends in full-time employment and aggregate hours worked are positive, and we're expecting the unemployment rate to stabilise. Notwithstanding that, growth in wages, consumer prices and population are expected to be weak by historical standards, and they're reflecting conditions in the domestic economy which are continuing to remain weak or soft. And that's basically the outlook. We've got it in the pre-election financial projections and a few other bits and pieces.
Thank you.
May I, Mr. Christmas? Of the measures that economists consider relevant that you've taken us to, the one where there seems to be the greatest, and you're predicting a persistent negative difference between long-term averages and current figures, is household consumption. That one seems to be staying stubbornly low compared to long-term averages.
Yes.
Is that, I know that you won't be able to cite empirical evidence, but is that a matter of capacity or confidence, do you think, at the moment?
I think at the moment it's been driven by, confidence will always be affected by what people are feeling, and wages growth has been modest. Employment, obviously some people are wanting more employment than they've got. Unemployment rate has, notwithstanding monthly volatility, has been above 6% consistent, well, when you average it over the last 9 months. And so there's no doubt there's an element of...
But that's just a long-term average, the 6% you were telling us. So is that an overreaction in terms of consumer confidence to the unemployment rate because it's been so low in recent years?
It may be also a reaction to levels, and I don't actually have, levels of debt in the economy. And so levels of debt nationally are quite high, and I suggest they're probably high here as well. Yeah. So when there's high levels of debt and the certainty, I suppose, the level of certainty is heightened relative to what you've come to expect in recent years, whether it's going back towards an average, it's really people are affected by their recent experience as well, and all those things will. A combination of those things will all be impacting on your consumption. The other reason why consumption would be expecting to be lower is we are forecasting population growth to be subdued, only reaching 1.8% by the end of the forecast period.
In answer to a question from Commissioner Emmanuel, you said that household consumption contributes about 40% to GSP. Is that
That's
about right? So any boost to household consumption would have a positive effect on the economy, presumably.
Yes, it's got to be a substantive. Yeah, I mean, because consumption is so strong, yes, increases in consumption will be, yeah.
And just on this one, and it may not necessarily end up being relevant because I think we can probably assume that persons on the minimum wage aren't the people who have savings necessarily. But in terms of giving that boost to the economy, if you had a choice as an economist between raising wages in Western Australia to or above the national wage price index, or having West Australians reduce their savings such that they're at the national average, which would have a better effect on the economy. Do you understand the scenario that I'm painting?
Yeah. So if you have reduced savings,
because you're telling me they're higher than the national level. So if West Australians were to reduce their savings to the national level,
yes,
would that give a boost to the economy? And if it was a choice either or, would that be better than a wage increase?
So those are aggregate savings for the state compared to nationally. Then there's a better measure of national savings than we have. So the data at the state level doesn't actually give us the same quality of savings information. So I just want to put that on the record.
Sure.
But where the comparable rates of where they're comparable ours is higher. So a rate, an increase in consumption supported by a reduction in consumption, the savings rate will boost consumption without potentially any employment effects. In fact, the increase in consumption could have positive effects. If we're increasing wages, it just depends on the extent of the increase, I suppose. But
I'm talking about getting it to national wage price index, because West Australia is lagging, as I understand it. So that's the choice between bringing West Australia up to national WPI or bringing savings down to the national level.
So, yes, to me, reducing the savings rate, provided people are doing that sensibly, and that's an important proviso, has no risk to employment. As again, I have to say, as long as that's done sensibly.
Yeah. Whereas
on the other scenario, has the potential to have some employment impact. Now, so there's that sort of. I'm just raising your awareness that out of those two, one has the potential for an impact, whereas the other has no, would actually probably be supportive of growth if done some sensibly.
Thanks, Mr. Christmas.
I'd like to ask you a question. Is there anything you can say to us about the impact of raising wages, if we're talking about the minimum wage, on unemployment, where the argument's made that raising wages causes people to lose their job or to lose hours? Is there anything empirical you can point to? So generally, to me, there seems to be not much evidence provided of that.
Yes.
And I wondered if you could provide us with some.
There's a lot of, I suppose, there's a range of research out there. I think the findings are a little bit mixed, but generally they're either increasing wages, minimum wages would have a negative impact or negligible impact. So if it's a very modest increase, it may have negligible impacts. But if it's a more substantial increase, then it can reduce employment. Yep.
Mr. Entrican, do you have any questions to follow up or to elaborate?
Thanks, Chief Commissioner. No, I don't have anything
Right,
to
thank you.
follow up on that.
Mr. Moss?
Thank you, Chief Commissioner. Mr. Christmas, just a couple of quick questions. You've identified that recent trends or some of the recent data with respect to employment has shown some modest improvement. But I just want to confirm your prediction is still that there will be a decline in employment over the course of this year compared to what it was last year. So there will be fewer jobs.
In 2016-17, that's our expectation. It's still negative.
Thank you.
This is everything based up to yesterday or this morning.
Yeah.
Obviously.
No, appreciate that. Thank you. They've also identified that one of our global risks is with respect to what's happening with the Chinese economy. Mm-hmm. And also pick up the point that you've mentioned that the Chinese economy is one of our most major or largest trading partner in that respect. So will I be correct in assuming that the risk, any sort of negative downturn in the Chinese economy will have a greater impact on WA economy than any other changes with other trading partners?
That would be correct, given that it accounts for almost half of our trade.
Yeah. And that there is and so the other point I'll pick up, I just want to confirm, we don't exactly know what China's growth pattern or projected forecast going forward will be until after its national conference later this year.
Well, the IMF will have. The IMF has forecasts and has published forecasts, and those I've mentioned them. I think I mentioned them. I'm happy to talk about them, but they would have perhaps that would be their central scenario. To what extent they would have picked up any sort of support for things this year ahead of that meeting. I mean, I wasn't their forecaster, but their central scenario isn't for economic growth in China to collapse. It's for economic growth in China to remain at 6% till 20 or above till 2019 and 5.9% in 2020. So that's their April 2017 assessment. So they'll be well aware of that meeting coming up. And I presume that any impact they might think it would have would be incorporated in their thinking.
And I get the sense that the projected growth for China is significantly or is far more modest than what it has been over recent years.
It is more modest, although in 2015 it was about 6.9%, in 2016 6.7%. It's been growing. Those are very strong rates of growth by any standards, but particularly off. They have come down from previously strong rates of growth, but as you get bigger, as the Chinese economy has, incrementally, just the fact that you're so large, your rate of growth will eventually taper, but 6% is a very solid number. So a very strong number.
Yes. And you have identified as well that the growth of debt in China is something that's likely to be of concern.
That's a risk as to how the transition and how they take themselves off being sort of debt funded or debt supported, I'd say, rather than debt funded, debt supported.
And depending on what approach they take in the future with respect to that may then impact upon growth.
That's correct, but that's not the central scenario, but there's a risk.
Thank you very much, Mr. Christmas. That's all our questions.
Thank you. Dr. Diamond?
Thank you, Chief Commissioner. Mr. Christmas, I'm just turning to your chart, consumption by category.
Mhm.
And yes, I'm looking at the sort of tendency for discretionary spending once you're getting past the, I think it's the December 2014 period to basically be a negative, or at least a small negative going forward from that point.
Can you direct us to which particular?
Sorry.
Okay, I do beg your pardon. So it's consumption by category on the chart. It's just after business investment. It's within the West Australian economies.
Thank you. Yes.
Yeah, you got that. So looking at the lack of discretionary spending, what would be the sources, if you like, of an increase in that component of consumption spending, given the importance, given the sort of 40% I think we agreed on was the contribution that consumption spending makes? What would actually prompt people to increase that spending?
Basically, there's an element of improved economic conditions, so improved employment outcomes, as one of the reasons, which should support confidence. So a stronger labour market would certainly be supporting that.
And with wages, because the Minister's submission, I don't have the, I think it's paragraph 20 of the Minister's official submission, says that an increase may assist with household consumption given low-income earners spend a larger proportion of their disposable income and have a lower capacity to save.
Look, there's no doubt that someone's income is important to their consumption. It's one of the drivers, but there's a number of others. Wealth effects, for example, would be another one. Cost of credit. A range of factors will impact on consumption, not just wages, but wages would be one of them.
Okay. And what would be the contribution to confidence and willingness to spend of a zero pay increase or a real wage cut?
Well, a zero wage increase for an individual doesn't, well, the confidence is certainly not, they may spend it for other reasons, but that's not going to lift consumption. So a zero wage will, if anything, moderate your confidence, particularly if you're expecting growth.
And just going back to some of the points about the role of China and China growth. Now, if we're sort of expecting that Chinese growth will be moderating, and there are sort of, and some scenarios in which it sort of we can no longer rely on it as much as we have in the past. Would it stand to reason that household consumption would become a much more important part of the WA economy?
What we will be seeing is probably net exports becoming a bigger part of the economy, because they're the part of the economy over the forecast period that's driving growth. So the actual share of consumption will depend on how consumption and exports net exports move over time, the shares change, and one of the big drivers of the change in share of consumption has been the investment pattern, and now it'll be the export pattern, which is derived from that investment. That's without having the numbers. Again, that's my expectation of the exports, but because they're the driver of growth, we have a big issue. If you're just talking shares.
But would we be relying more on on the domestic economy, on our own efforts, if you like, on our own consumption of goods and services?
To sustain
overall growth.
Well, I forecast at least in the next 2 years for extremely strong export growth. And then beyond that, our forecast of exports do taper off. But in the next 2 years, when you're talking about I think it was 8% and 6.5%, those are strong rates of growth.
So you're expecting strong rates of growth regardless of how things pan out in China necessarily?
Well, our central scenario is not that China is going to have problems. Our central scenario is that China's got fairly stable rates around, would have to say IMF, we take them as a guide. We're not necessarily China experts ourselves, so we don't only look at the IMF, but we do use their forecasts as a guide for our expectations of that. Inform our view of where it's going to go, and those rates are at 6% up to 2019 and 5.9 after.
Okay, thank you, Mr. Christmas. No further questions.
Just on China, if I could just have the benefit of your knowledge, Mr. Christmas. The very first graph in the slides is West Australia's key export markets.
Mm-hmm.
It seems to show that China over the last 10 years has become pretty stable, really, in terms of contribution. And it's the lighter blue other that has dropped right off from the first decade of the century to the second. What's going on there?
Yes. So our other trading partners, among our key trading partners is the US, which has been very sluggish since the GFC, and it's only really now that the Fed's been prepared to actually raise rates. So it's only, it lowered rates fairly soon after the Fed, after the GFC, and basically rates have been very low for that whole period, and that's because growth has been sub-trend, and the United States is a sort of being the globe's biggest economy will be a key driver of overall growth.
So that is, the US economy is going better. The other countries mentioned it, might manufacture more for the US market and require more of our raw materials. Is that what you're saying?
What I'm saying is that those markets will, to some extent, be impacted by the sluggish growth. If America was growing stronger, they would have grown more than they have. And so there could potentially be a flow through to our exports. Yes, there's sort of a feedback.
Well, it seems to me that in the last 10 years, I know things can change, but in terms of operating within a certain band, China's starting to operate a pretty safe bet from year to year.
Yeah, I suppose what we're doing is highlighting a risk, and that risk...
Oh, I understand, but for all the focus on China,
yes.
the last 10 years shows that
yes, it's been
quite steady.
It's been made a very good contribution, and iron ore has been a big part of that.
And it would be nice if the light blues picked up a bit more.
It would be, yes. That's correct. I mean, Japan's been very, very sluggish as well, although you could argue it's been sluggish for a long period of time. But and I don't have the historical rates of Korea, who is also one of our big but more recently you're talking about the high 2s and 3% growth rates. I suspect they would have been growing at a bit of a faster pace earlier in the 2000s than that.
Thank you.
Thank you, Mr. Christmas. You've concluded your evidence. You may stand down.
Thank you. Thanks, Commissioner. Thank you.
Mr. Edgecombe.
Thank you, Chief Commissioner. And thank you to Mr. Christmas. The Minister for Commerce and Industrial Relations certainly extends his appreciation for your time today. We will now move on to the Minister's position. The Minister relies primarily on the written submissions that have already been lodged with the Commission, but I will take the opportunity to reiterate the basis of the Minister's position and to address some of the issues that have been raised by other parties. The Minister recognises the importance of maintaining a strong safety net for those employees who remain in the state industrial relations jurisdiction. The annual review of the state minimum and award wages plays a vital role in protecting the needs of the low paid and helps to ensure the maintenance of a fair system of wages and conditions of employment for West Australian workers. The Minister supports the Commission taking a balanced and equitable approach to minimum and award wage setting to provide for West Australian workers, while also ensuring that any outcome is sustainable in the current environment. Section 50A of the Industrial Relations Act requires the Commission to consider the need to contribute to improved living standards for those West Australians reliant on the state minimum wage and state award rates of pay. The Minister believes that granting a real wage increase in this year's state wage order will improve the relative economic position of the lowest paid workers within the state system and will enhance their standards of living. The Minister submits that in this year's state wage order, it is appropriate that the state minimum wage and adult award rates of pay be increased by a flat dollar amount of $19.20 per week. A flat dollar adjustment to minimum and award wages would ensure that the greatest benefit of this year's state wage order is directed to the lowest paid. The Minister notes that the Commission has itself targeted those employees on the minimum wage or slightly above it in previous state wage case decisions. Indeed, since 1993, the Commission has awarded flat dollar increases in 21 out of the last 23 state wage decisions. A $19.20 a week adjustment would increase the state minimum wage by approximately 2.8%, lifting it to $712.10 per week. For other award rates of pay above the minimum, the Minister's proposed increase would amount to less than 2.8%. For instance, it would represent a 2.4% increase at the C10 level in the Metal Trades General Award. It would represent a 2.2% increase for a senior hairdresser, a 2.5% increase for a shop assistant working Monday to Friday, a 2.4% increase for a carpenter, a 2.6% increase for a level 2 weight person, and a 1.9% increase for a registered pharmacist. The Minister acknowledges that an increase of $19.20 per week represents an amount that is above inflation. However, the Minister submits that in this year's state wage case, the focus should be on assisting the low paid, and it is appropriate a real wage increase be applied. As some of the other parties have already referred to in their submissions, Western Australia has experienced a significant reduction in the minimum wage bite in recent years. That is, the proportion of the minimum wage to average weekly ordinary time earnings. Indeed, Western Australia now has the lowest bite of all the states. While there are various reasons behind the decline in the minimum wage bite, the Minister is nonetheless concerned to ensure that minimum and award wage earners are not left behind and the living standards of the low paid are maintained in line with those in the broader community. It is acknowledged that Western Australia is currently experiencing challenging economic conditions. However, most indicators are projected to improve across the forward estimates, in line with the recovery in the state's domestic economy. And indeed, the presentation of Mr Christmas largely bears that out. As outlined in the Minister's written submission, research conducted for the Fair Work Commission suggests that a majority of award-reliant employees are employed at rates of pay between the minimum wage and the C10 classification, certainly in the National Industrial Relations System. And it's likely that the impact of the state wage order will be largely concentrated on those workers earning the minimum wage or working under lower award classifications. The state minimum wage is currently around $36,000 per annum. The C10 classification, which is the skilled tradesperson's classification, is currently around $41,000 per annum. These employees are not highly paid by any definition. As also outlined in the Minister's written submission, the most recent employee earnings and hours data from 2016 indicates that award-reliant employees in Western Australia have the third lowest hourly earnings in the country, and this figure is actually lower than the national average. The state wage order can play an integral role in not only maintaining a safety net for award-reliant employees, but in improving the living standards of these workers. Many low-paid workers are unable to bargain for higher wages and are solely dependent on increases determined in the state wage case to meet changes in their everyday living costs. Providing fair and appropriate annual increases in the state minimum wage and award rates is essential to the plight of these workers. In its submission, the CCI advocates that the state minimum wage and state award wages be maintained at their current level. The primary reason for maintaining this position is that the state minimum wage is currently higher than the national minimum wage. While Western Australia currently has a higher adult minimum wage for full-time and part-time employees than in the national jurisdiction, the Minister contends that it would not be fair or equitable to impose a wages freeze on many of the lowest paid workers in the community. Although inflation is currently modest, the cost of living is nonetheless rising. A wages freeze would lead to a reduction in real wages for minimum and award wage earners, adversely affecting their standard of living. The Minister submits that a wages freeze would be inconsistent with many of the statutory criteria the Commission is required to consider when adjusting rates of pay. In particular, it would not meet the needs of the low paid, as the low paid would suffer a reduction in the real value of their wages. It would not contribute to improved living standards for employees, as a real wage reduction would reduce the living standards of these employees. It wouldn't protect employees who may be unable to reach an industrial agreement, as employees who are unable to reach an industrial agreement would suffer a wages freeze. It wouldn't encourage ongoing skills development, as a reduction in real wages may lessen the attraction of undertaking an apprenticeship or traineeship. And it's unlikely to assist with the notion of equal remuneration for men and women for work of equal comparable value. In particular, a reduction in real wages would have a disproportionate impact on female employees, given women are more likely to be paid in accordance with an award than men. The Minister also notes that not all minimum wage rates in Western Australia in the state industrial relations system are higher than those in the national system. As illustrated in the Minister's written submission, or the submission in reply, the statutory minimum wage for adult casual employees in the state system is currently lower than it is in the national jurisdiction. And this is due to a higher casual loading being applied in the national system. Similarly, the statutory minimum wages for award-free trainees, award-free apprentices, and some award-free junior employees in the state system are also currently lower than in the national system. And while some rates of pay in state awards are marginally higher than in comparable national awards, other award rates are lower. It cannot therefore be assumed that state system employers are always at a comparative disadvantage with their counterparts in the national system. The Minister notes that unions WA and WACOS recommend the Commission increase minimum and award wages up to the C10 level by $45 per week and adjust rates of pay above the C10 level by 5.7%. While the Minister supports a real wage increase for minimum and award wage earners, It is also important that any wage outcomes awarded by the Commission will not adversely affect the employment and therefore incomes of low-paid workers. The quantum proposed by Units WA represents a 6.5% increase in the state minimum wage and an increase in award wages of between 5.7 and 6.5%. In the current economic environment, the magnitude of such an increase in wage costs would be considerable for many of the smaller employers remaining in state jurisdiction. While it is true that low-paid employees have a greater marginal propensity to spend, and that low wages growth can have a dampening effect on spending and economic growth in the aggregate, the benefits of higher disposable incomes can only be fully realised if employees do not suffer a loss of employment or a significant reduction in working hours. The Minister submits that an increase of $19.20 per week would provide a fair and sustainable increase in pay for minimum and award wage earners. A critical issue that arises each year in the state wage case is who is covered by the state industrialisation system and therefore the state wage order. For the benefit of the Commission, I'll provide some further information on this issue, as it is something that's raised quite frequently. Research conducted for the Department of Commerce has previously estimated that somewhere between 21.7% and 36.2% of West Australian workers are covered by the state industrialisation system. This includes the state public sector, which accounts for approximately 12% of the West Australian workforce. While this is 2010 data, the Minister does not believe that the coverage of the industrialisation system, the state industrialisation system, will have changed significantly since this time. Unfortunately, more recent data is not available. There are a variety of challenges involved in measuring coverage in the state industrialisation's jurisdiction. In relation to the legal structure of organisations, a number of businesses are established under trusts, and a number of trusts in turn have proprietary limited companies sitting behind them. That is, the trustee of the trust is a proprietary limited entity. Partnerships in Western Australia can also include incorporated entities, meaning employees of some partnerships can also fall within the national system. Generally speaking, where a proprietary limited entity is present anywhere within the ownership structure of a business, employees of that business are likely to fall within the national industrialisation system, assuming the business has trading activities. Adding to the complexity of determining coverage in the state jurisdiction, employees of local government in Western Australia can also fall within either the state or national jurisdiction. Employees working for not-for-profit and community-based organisations can fall within either the state or national system as well, depending on whether the organisation is incorporated and has sufficient trading activities to deem it a trading corporation. Finally, the independent school sector also operates within both the state and national industrialisation systems, depending on the financial and legal structure the school operates under. Given all of the above variables and the problems associated with obtaining more up-to-date data, it is difficult to obtain a precise estimate of how many employees are within the state industrialisation system. At best, it is likely that we won't ever be able to estimate coverage as falling within a range based on various assumptions. The Minister's written submission includes detail on apprenticeship and traineeship commencements and numbers in training. It also includes analysis of some of the factors that are contributing to the reduction in training numbers in recent years. The information and analysis regarding training arrangements in Western Australia has been provided by the Department of Training and Workforce Development, and the Minister sincerely thanks the departmental staff who have provided this valuable information. As the agency with primary responsibility for managing and overseeing the vocational and education training system throughout the state, the Department of Training and Workforce Development is well placed to comment on the factors that are likely to be influencing the decline in training numbers currently taking place in Western Australia. As outlined in the Minister's submission, apprenticeship and traineeship commencements have declined in recent years due to a diverse range of factors. Some of the reasons for this decline include the composition of the state's labour market, including growth in the proportion of employees working part-time. Slower employment growth within industries that have traditionally been major drivers of employment-based training, in particular the resources sector and construction. Economic factors, declining capital investment, and also demographic trends, including changes in the state's youth cohort. The Minister notes that training numbers have also fallen significantly at the national level and suggests that economic conditions alone are not the only contributing factor in the take-up of apprenticeships and traineeships. Finally, the Minister is not seeking any changes to the current state wage fixing principles and submits that the effective date of the state wage order and any adjustment to minimum wages should be 1 July 2017, applicable from the first pay period on or after that date. We have no further substantive information for these proceedings, although we reserve the right to respond to the matters raised in the presentations of the other Section 50 parties. Just in relation to the issue regarding employment figures in the regions, the Minister is happy to provide some updated information on that. The ABS, or the Department of Employment, does produce some employment figures by local area, local government area, and statistical regional areas, so we can certainly provide that. If it pleases the Commission Court session, this concludes our primary submission.
Thank you, Mr. Ingram. Mr. Moss.
Thank you, Chief Commissioner. Okay. CCI does rely on its submission replies with respect to these matters, but there's a few matters that we'd like to just draw some attention to. One of the things really of note is that over the last 3 years in particular, Western Australia has gone from leading the country to now falling behind the national average on almost all of the key major indicators. The strong performance of the WA economy, which is a significant contributor to the high minimum wage in the state system that we currently have largely disappeared. And whilst at the national level the economy is starting to grow, WA continues to remain in a difficult period of transition. CCI recognises that over the last 2 state wage case decisions, the Commissioning Court session has recognised the need for more conservative increases than those granted at the national level. And in part, that's a recognition of the changing economic circumstances and the negative impact that the changes in the economy have had on employment in a particular level of jobs and also the hours of work that people have available to them. In particular, we note that the state of the WA economy has deteriorated further from this time last year. And as such, we believe that a more conservative approach remains relevant in this year's proceedings. We would note that the reason for our position is not simply based on the impact of the existing gap between the state and federal minimum wage on small business owners, as has been suggested by both Unions WA and the Minister. With the high levels of unemployment as well as underemployment facing WA workers, we also believe that maintaining the rates at the current level will also help moderate the risk to employment. In times of reduced economic performance, there is an increased focus on reducing costs, and for many industries, labour is a major contributor to their overall costs of doing business. Across the private sector, employers and employees within a range of industries have been negotiating wage freezes to minimise the risk to employment, and this is reflected in the declining wage price index, particularly for the private sector, as well as the increasing trends of parties seeking to vary federal enterprise agreements to adjust previously agreed wage rates. Our position is that this matter is no different to what's already occurring. So our position with respect to the state wage case claim is no different or simply a reflection of what's already occurring within much of the private sector.
Is there some sort of lag built into the negotiations for increases in that many of the agreements that were reached at the end of the peak, would they have been negotiated on the basis that they were at the end of the peak and people could foresee reduced conditions? Are we now at the end of that cycle, or are we going to see a lag where for the next couple of years at least agreements are still going to be negotiated in the way that you say?
Yeah. So what we're seeing anecdotally, and one of the difficulties is any clear data on this aspect. A lot of the agreements, so you're quite correct, there's a lag time. Most agreements are of a 3-year duration. Some are 4, but that's relatively a relatively small amount. At the time that a lot of businesses were seeing that looking forward, things weren't likely to be the economy was going to be reducing down. In particular, they could see their order logs starting to reduce. And so we did see at the end of that period a more conservative approach from employers. But the level of information is unequal. Not all businesses saw that, nor for that matter did all employees see what was coming on. So employers, whilst were trying to negotiate for wage constraint, were still being faced by very high demands for wage growth, which was looking at historical impacts. For argument's sake, well, over the last 3 years, our average increases were 5%. Why are you suggesting it should only be 3 or 2% now? So that readjustment on the views of both parties is important. Anecdotally, what we've seen is a number of agreements that have been struck in more recent years. There's an increased tendency towards parties looking at renegotiating those rates, whilst the agreement is steady in term, and therefore creating a variation of those rates. And of course, with new agreements coming forward, they're either being renegotiated with lower rates. But what we've also seen quite recently is a decline in the number of, at the federal level, number of enterprise agreements being negotiated. And this is both agreements that are specific to Western Australia, but also at the national level as well. There's a variety of reasons we believe are attached to that, but one of those is simply if it's going to be too difficult to negotiate increases to wage rates, then you allow the agreement just to stay and lag and continue in operation without then renegotiating new rates on top of that. And in part, that's also, it's a more protracted ability in this time to negotiate agreements going forward. So we will expect that there will be some catch-up, but this is one of the things that you quite rightly observe. There is a lag effect with agreements when they are negotiated in. They do have to be maintained, and sometimes it is easier to adjust wage costs by reducing or changing the number of people that you have employed, rather than negotiating variation of wages. And that is one of those aspects where there is a greater propensity to negotiate variations, because increasingly employees are recognising that there is an element of choice there. That quite often maintaining high wages within agreements can have a negative impact on the number of people which are working within the organisation.
Thank you.
So our position quite broadly is that what is a fair outcome to WA's small business sector is also a fair outcome for employees. The economic circumstances mean that it's a more difficult trading environment for employers, but likewise, the labour market is more precarious for employees as well. With respect to the Minister's position, CCI recognises that the Government has recently revised its public sector wage policy in recognition that as an employer it also needs to constrain labour costs. The quantum of what they're seeking as part of the state wage case order is the same as now the maximum cap that's being applied to public sector wage bargaining. But what should also be noted is that the $19.20 or $1,000 that they're seeking at the federal level, as part of their public sector wage policy, is a maximum cap on at the top end what can be negotiated through wage bargaining, whereas what they're seeking in these proceedings is the minimum increase to award wages.
And why is that significant?
Well, it's particularly significant given the base on which they're applied. So the revised public sector wage policy is being applied to rates which are significantly above the award rate to pay. So these are rates that have been negotiated through successive enterprise agreements and, generally speaking, with wage growth in excess of that, which is in the award sector. What that means then is that the $1,000 annual salary cap that's being applied at the federals, as part of their public sector wage policy, is for most public servants is below the 1.5% public sector wage cap that had been applied previously. And of course that naturally makes sense because the intention is to get a reduction in wage cost in that. In the case of a level 9 public servant based on the general enterprise agreement, it's as little as 0.6%.
Doesn't that just mean that it's minimum wage income earners who get the greatest benefit?
Yes. Yeah. So it means that the percentage increase for level 1 public servants will be higher than level 9 public servants, which from the government's perspective as its public sector wage policy, that's very much open for it to establish that as its approach. But taking that and applying that to that same quantum to the award rates results in a much higher increase. And as Mr. Endrican has already identified, those increases are well above CPI and well above wage price index. I think one of the other things to note with respect to the public sector wage policy is its extremely low outcomes. And it's also attached with a very explicit threat that any arbitrated amount above these figures will be at the expense of jobs. In expressing this, the government's clearly recognising the links between jobs and wages. And it's difficult to reconcile the government's public sector wage policy with respect to that to its submissions on these matters, which impose a significant higher increase, proportionately speaking, on small business employers. We do note in his submission in reply, the Minister has criticised Unions WA claim as potentially jeopardising jobs and working hours, and we do believe that's a very appropriate observation. However, the Minister doesn't identify why its claim, which is still significantly higher than CPI and private sector wage growth, doesn't achieve the same effect, nor have they identified to what extent do they believe that that increase won't have any impact on employment. We do know that Unions WA and WACOS submissions are in line with the ACTU claim for the National Annual Wage Review, and there appears to be no apparent adjustment to take into account the range of circumstances facing the WA employers and employees as distinct from what's happening nationally. Our observation is that the aim is clearly ambit, and there's no formulation or reasoning provided behind it as to why the quantum that they're asking for is being sought. In particular, I think one of the things that we note is the claim that Unions WA is seeking this year is much higher than the claim it was seeking last year. And this does seem to be at odds with what we're seeing is traditional bargaining practices or common bargaining practices in enterprise agreements. Most unions over the last couple of years have been moderating their wage claims in the recognition that high wage growth is unsustainable in the current environment. And we're seeing that with the declining, not only the declining levels of wage price index, but trends in enterprise bargaining reports that Federal Department of Employment produces also shows that wage increases in WA are coming off the ball in both union and non-union agreements. So whilst there's a recognition within the trade union movement more broadly that high wage growth is unsustainable, it seems a little bit at odds that this year the claim is for a significantly higher increase than we have seen in the last 2 years. We are also concerned with respect to the claim that any increases should be applied in full to juniors and apprentices. We do believe that this claim should be disregarded, given the absence of any detailed argument supporting the claim, or for that matter, any consideration being given as to how such an outcome could actually be achieved without significantly revising the awards themselves. We're at a loss to see how that could be practically achieved through a state wage case order in the first instance. One of the things I would note, and following on from the evidence of Mr Christmas, is the high level of youth unemployment, and in particular his comments that the high level of youth unemployment seems to be demand-driven. That is, less appetite for employers to engage young people, as distinct from a supply-driven aspect whereby young people aren't simply taking the opportunities that are available to them. And I think this is just simply a reflection of what's happening in the economy. As employment levels decline, you have a greater proportion of more experienced and more skilled workers seeking employment. Hence, those with less skills and less experience become less competitive, and hence are more likely to be unemployed than those who've got more skills to bring into the job.
Having said that, by Mr Moss, I think Mr Christmas said that that's one of the few areas in which West Australia is doing better than, say, New South Wales, which has a higher youth unemployment rate than us. I just note that to see whether you want to comment upon it, but I did, as I understood the evidence, Mr Christmas is one of the few areas where we're actually doing better than someone in the eastern states.
Yes, and I suppose with respect to New South Wales, in particular areas of New South Wales like Western Sydney, I think they have some more systemic problems associated with youth unemployment than we fortunately have in that respect, particularly youth unemployment coming off of out of families which have had long and systemic periods of unemployment. But one of the things I would note in that graph is that our youth unemployment rate is increasing at a very steep angle. And the concern is that applying a very, very high increase to juniors will just simply make them less competitive.
Thank you for responding, Mr. Moss.
It does appear very clear that the WA economy is performing poorly compared to any other states. The ComSec State of the State report shows that WA has fallen from number 1 position, so leading the other states and territories in October 2014. And we're now placed at number 8, falling behind the performance of South Australia and Tasmania. If the Commission pleases, I actually have a copy of the more recent report.
Thank you.
For that, if that's of use. Unfortunately, and there's this, this paints, I think, in a fairly simple picture as to how we sit compared to the other economies. But it's certainly not the position that we've been used to holding for quite some time now. It shows that we are lagging behind both South Australia and Tasmania, each of which has for a long time been recognised as relatively poor performing states from an economic basis. This really, and I won't take too much to it, it's a fairly short report and simply misreading, but what it does show is what is a commonly recognised aspect, that we are performing well below the performance across the country. And so whilst there has been some signs of growth nationally, particularly as a result of growth led by both Victoria and New South Wales, And as the State of the State report also shows, quite significant growth within the Northern Territory as well. This hasn't been the case within Western Australia. We have declining business investment. And in declining the level of business investment, it also reduces the potential for job creation. I note the comments or the question that was made with respect to are we returning to sort of a more longer term trend. One of the things that we do need to note, though, is that we do have a larger economy here in Western Australia now than what we did have during the 1990s. And in order to maintain that economy and the size of the economy now we do need to have ongoingly higher levels of business investment in order to maintain where we're at. We have seen a contraction in state final demand. And given that state final demand measures the domestic economy, given the industries which are largely covered by the state system, we think that's probably a more relevant consideration to be given, given that it doesn't take into account to the same extent the impact of the resources industry. We have weak business confidence. The CCI Business Confidence Survey shows that 71.1% of businesses surveyed in WA expect conditions to remain the same or get worse. Reference was made to the NAB Business Confidence Survey, and it is important.
Can I just refer you to your Appendix A, which is headline, next 12 months looks bright for business, and the first three paragraphs say, despite ongoing challenges within the economy, Western Australian business confidence continues to tick upwards, with short-term expectations subdued for the immediate future. And it goes on to say, the index rose to 95.4 in the March quarter, up from 95.1 in the previous quarter, continuing an upward trend seen over the last 9 months.
Yeah. So, and this is similar to what's been reflected in the NAB survey, in that there are more businesses who are seeing we're seeing an increase in the number of businesses which are a little bit more optimistic, but overall the majority of businesses are still pessimistic, or things will remain the same. So what this is indicating is that we're seeing a small increase in the number of businesses who are saying things are looking a little bit more optimistic, but what's important is that the baseline there, so baseline being 100 or 0, the business confidence still sits below that baseline. And what that means is more businesses are pessimistic than they are optimistic.
I must say that's not the impression I would have been left with having read that headline and first sentence.
No. Now, in part, one needs to also understand that the economy, to a certain extent, there's an element of if you act confident and promote confidence, then you will be confident, and therefore the economy is likely to be more confident flowing forward.
Why don't we do that, Mr. Moss? Why don't we do that? Why don't we act with confidence?
That's a very good question, Commissioner.
It's got to start somewhere, doesn't it?
It does. The issue is the confidence needs to be from a sustainable base. In order to, it needs to be, you need to look at where you start that business confidence. You need to start that business confidence through injection in investment, and then that can flow on to increased employment and increased wages.
But if a person on a minimum wage is more likely to spend their money than another person, as submission's been made several times, is that not going to encourage investment?
It's got to be that level of sustainability. So I would think of it in a logical sequential aspect. You need to start by growing the economy, by increasing investment. Then it leads to an improved labour market and labour market being increased employment, which then flows on to higher wages. Increasing wages when there's not that underpinning growth below that means that employers are more likely to then straight away moderate employment to adjust the differences, and therefore you don't get that flow-on effect.
Tell me, if you can, the businesses that you represent, don't they generally understand that the West Australian economy can be quite cyclical in nature?
Yes. Yep.
Aren't they saving when times are good because they know that that's going to come off? And are they not the persons who have savings that they're not currently accessing, or that they're not currently introducing into the economy?
Well, one of the things that we need to be mindful of, in particular, if we're looking at the state system, is the private sector businesses covered by the state system are small businesses.
I understand that, but small businesses are as capable of large businesses of understanding the West Australian economy is cyclical.
That's understood, but they also have less resources and capital behind them to accumulate and therefore inject back in. So many small businesses have issues associated with cash flow. They don't have significant investment in capital. To the extent they do have significant investment in capital, they're not liquid assets. They're invested in property, machinery, things that cannot be readily drawn back out. And the other aspect is you need to operate within the environment that you're in. Businesses can't operate unsustainably. Businesses do need a return on investment. That is, you do need to have profit, so you need to be profitable from year to year. If you can't look at it going, well, for the next 5 years we're happy to run at a loss, particularly from a small business sector, that capability just simply does not exist. So in other words, you've got to operate in the now, and you've got to look at what's happening around you now and react in that basis.
So when times are good, I know we're speaking a very high level of generality here, Mr. Moss, so I'm not going to sort of hang you on anything you say, but isn't some of the money made during good times dedicated to savings?
I'm not qualified to answer that.
Because I know Mr. Christmas tells us that we have a higher level of savings in Western Australia than the rest of the country. Someone must be saving money, and to my mind, at least one way of injecting some confidence into the economy would to get some of those savings out of bank accounts or wherever they are and into the economy.
And that does raise issues about monetary policy, and to a certain extent, I think that question might be more directly raised to the Minister. Because if you look at who is generally viewed as having great capability of injecting money into the economy, quite often that is the government.
They're telling us they're broke, Mr. Moss. if we believe what we read in the media.
Well, private individuals have savings. One way of giving the boost to the economy is to have those savings flow into the economy. I don't think you know is the short answer, but it may be that small business owners have some of the savings and it could be applied to increased wages. But you probably don't know the answer to that question, and that will be fair enough.
A recent report, and I must admit, I didn't receive it in time enough to put it into submissions, but what it did indicate was that small businesses, as a rule, small businesses weekly earnings tend to be lower than average wage earnings. But one of the benefits of businesses, is that return on their investments. So at the end of their working life, they tend to have a high level of assets. But those assets aren't liquid assets, and what that therefore means is they're not readily converted into cash in order to be used in other ways. So where you have your assets locked up.
I'm not sure that squirreling away is helping the economy just at the moment. I think that's at least one of the points that Mr. Christmas makes.
And I think one of the things that was quite noticeable in Mr. Christmas's evidence was if people release the savings, that's a much better way of increasing household spending than increasing wages. There would be the risk of job loss, whereas increasing spending of savings would not.
I think wasn't his point, though, prefaced on the increase in wages being at unsustainable or, basically too much of an increase rather than just an increase?
Yes, that was his comment, and our view is the position of both the Minister and Unions WA are promoting an unsustainable.
I understand from your submission.
Yes. But yeah, quite often with small business, the assets aren't easily released. And that's the thing. If you've got investment in capital, that is machinery, those types of things, it's hard to then realise the value in that in the short term. You just can't sell it off, in other words.
Thank you again, Mr. Moss. I always appreciate that you give me a direct response to the question that I asked.
Thank you, sir. We are seeing decline in jobs. We're seeing high levels of unemployment, underemployment. Youth unemployment, as mentioned before, is really quite high. One of the concerning elements is the duration of time that people are spending in unemployment is increasing. So we've seen a rise from 2012 to 2016 data in how long people were out of work for. So currently 54.7% of people are out of work for longer than 13 weeks, and 22.7% are out of work for more than 12 months, so therefore leading into long-term unemployed. We are seeing a decline in interstate migration. So people are leaving WA to move further to the East Coast for better jobs. Comment was mentioned, what's the impact of, we're seeing job losses, are people just simply going back to where they lived before? That is, are they migrating back over to the East Coast, or in the case of 457 workers, they're going back to their home countries?
Often with their savings to pump into the local economy.
Yes, although I might not be able to comment on that one, but yes, that's I think one of the things to put into context with that, and I don't have the figures here, but the skilled migration was only ever a very small percentage of the WA workforce at any given point of time. And whilst that increased, whilst we had a very strong skill shortage, the numbers of 457 visas has declined quite substantially.
I'm more interested in interstate
there as well.
Interstate persons, perhaps not in the skilled,
Yep.
Who came to West Australia, made good money,
Mm-hmm.
and have now moved back.
Yeah, anecdotally, the experiences that we had during the boom, because one of the things that we, from CCI's perspective, we were quite conscious of, is the skill shortage was really biting in hard, and the labour shortage generally was really biting quite hard for our members. Was trying to entice people, from the East Coast, particularly areas like Newcastle, which were suffering high levels of unemployment at the time, to come across to WA. We had very, very low interest in take-up of that. People were well rooted over on the East Coast and weren't coming across. We had some increase in FIFO workers doing FIFO from the East Coast, but they were residents of the East Coast, and therefore that's not impacting on WA employment data, or in particular not impacting on WA unemployment data, because they're residential over there, not over here. So whilst to a certain extent, and the WA economy is adjusting, we are moving to probably what might be viewed as a new normal than what we had before. But what needs to be recognised is that there is still a significant shock in the transition that we're moving from the high base that we were to where we are now and where we may end up in a few years' time. Mr. Christmas identified, and the question was asked, are we at the bottom? Mr. Christmas identified, well, maybe, but maybe not quite yet. I think for the purpose of state wage case proceedings, we need to be focusing on where we are now, not where we might be in 2 or 3 years' time. We are hopeful that the economy will be improving. From a business community, we want business to improve, the economy to improve, and therefore that will have good direct flow and affect both the number of people employed and also more positive wage growth as well. the issue is we're not there yet. We're hopeful that things might be improving in the future, and that is reflected in things like long-term business confidence, seeing that these things might improve. But short-term, the economic indicators are pointing that things are pretty bleak at the moment. And I think that's where we need to be focusing our efforts and our time on. Both the NSWA and the Minister have contended that a significant increase in minimum rate of pay will stimulate the economy through higher spending, and we think there are a number of flaws in that logic. First of all, if we're looking at stimulating the economy by way of the state wage case decision, Professor Plowman identified that 2.2% of the WA workforce are potentially directly affected by the minimum wage order, and up to 4% in various different degrees. This is a very low basis by which one is seeking to stimulate economic growth upon. The other thing that the arguments doesn't take into account is the direct cost to employers. The Fair Work Commission industry profiles that have been conducted as part of the penalty rate decision, and that the Commission in Court session noted in last year's decision, show that employers in the retail and hospitality industry, shows the types of reactions that employers in the retail and hospitality industry are likely to take to short-term and long-term increases in wages. And that includes issues such as reducing staff levels, reducing the hours of work and the number of shifts that employees receive, and increasing the hours of work performed by owners and family members and salaried staff. We see no change to that, that posed with increases, and in particular significant increases, employers will respond by reducing the demand for labour. Their modelling also fails to take into consideration that the cost to employers of an increase in wages is greater than the benefit that is received by the employees. So the model may well work if you're putting an injection of money into the economy, but the model that's being proposed is, in order to inject money into the economy to increase retail spending, you first have to take a greater amount of money out of the economy. The cost to employers is higher than the benefit received by employees. There's a filtering effect. Some of that money is filtered off by way of income tax, higher income tax, increased workers' comp premiums, increased superannuation contributions, and for some businesses, increased payroll tax contributions as well. There's a filtering effect. Some of that money disappears and therefore is not directly spent. And I think to give it a clear example, to the extent that the government thought this approach was workable, then it's the largest employer in the state with over 107,000 full-time equivalents, and as the Minister identified, representing 12% of the workforce. Surely the government taking the same approach with its public sector wage policy would do more good for the economy than seeking to increase the minimum wages of state award-reliant employees, bearing in mind that at best figure, only 4% of the workforce would be in some way affected by that. The government hasn't taken that approach, and we think with good reason. The model is flawed. Rather, the state government has reacted in the way that most private sector businesses have already responded to the change in the economic environment, and that is to manage costs. So, whilst we know household spending is an important contributor to the state economy, we don't believe arbitrarily increasing wages is the appropriate response. What we need to do is to grow employment first and increase working hours by growing through sustainable growth in the economy. And from that then, increased spending can arise. I think quite simply that there's no quick fix to the challenges facing the WA economy. There's no silver bullet. And simplistic arguments that suggest that there are tend to not consider a number of other issues. You know, it would be nice if there was a quick fix. One isn't available.
Mr Moss, before you proceed, it's now 1, so we'll take the luncheon adjournment now and reconvene at 2:15.
Thank you.
Thank you all.